Good evening, good morning, good afternoon, wherever you are in the world. Welcome to the Sunday Open with Nick4aTick. I am Nick. How are we all doing? How was everyone's weekend? I'm curious if you guys, if everyone had a little bit better weather than I did. It's been like downpouring. If you don't know, North Texas in the spring, you get like tornado warnings. We get thunderstorms out of nowhere, but then it can be absolutely beautiful randomly. So, unfortunately, we were dealing with some rain, and it's still continuing to rain. So, hopefully, nothing's too bad, and we can make it through the show, and I don't lose power or anything. Probably not too much to worry about, but it's good to have everybody here. Well, if you were living under a rock, I guess, or were doing better things on Friday post, I guess, RTH close, you may or may not have missed the news of the Moody's downgrade, which pretty much was the or Moody's downgrade of the U.S.'s credit worthiness, credit rating, whatever you want to call it. But I would imagine that might provide us with a little bit of some trading opportunities here in the Sunday Open as we get started in about 14 minutes. I would assume we might have a bit of a negative reaction. I think the last few times, and there's probably people smarter than me in the chat that actively or actually know the hard numbers, but I believe the last two downgrades that we had from some of our lovely rating agencies, the S&P tended to decline given like that next coming week or in the next like 14 trading days. I think there was a couple different stats I was seeing. So it will be interesting to see, not necessarily even tonight, but how the market kind of digests the news, not even reacts to it, but how we kind of trade over the next couple of sessions, especially with a looming holiday on deck and the market just seeming like it's ready to sleepwalk already into kind of June and July and just slowly drift up the way it's been. So without further ado, let's take a look at the charts. And I just wanted to highlight this, like I said, in case you weren't paying attention, you haven't done your prep yet, you haven't really come in and really taken a look at the charts. This was the Moody's downgrade. And the reason I kind of want to show it is because I'm sure Leo's lurking if he's not already here in the chat. But of course, the bottom catcher of that violent end of day, or within the last few minutes of the kind of cash close for futures at 4 p.m. Central was, of course, the 5-minute opening range mid, ready to just catch that falling knife to save us from any sort of further bloodbath and retracement of the entire day's session. So naturally we just kind of wicked off that and settled just slightly higher around 59.48. So that gave me a good laugh that was exactly kind of where the bleeding stopped in that violence of the news being released. But how did we all trade this last week? If you remember last Sunday, we gapped up. I would think it was no shock as the China tariff deal news was on the table. And I don't think that really shocked anybody that was paying attention or even watching this show. I think majority of us were calling for a slight gap up. So tonight, I'd love to hear from you guys too. What do we think? Is the Moody's downgrade going to lead us to a slight gap down? Are we going to close around settlement, or are we going to shock the world here and gap up and continue to move higher up towards 6,000s again? So if I was a betting man, as I think a lot of us traders are day in and day out, I'm going to bet for a small gap down. I think all eyes are on, do we come and retrace and retest some of these levels from last week? Obviously that gap still heading down under 5,700s. From last Sunday's open, it still is an area before we kind of kick off the slow grind, that death march upwards that always tends to be that drift in the summer. I would love to see at least this gap filled before we get to roll over in June. I'm not calling for it this week, but the Moody's news may be that fuel that any sort of seller that was looking to start taking profit, anyone that was kind of buying this low, maybe up around 6,000, it makes sense to lighten up, and you might find some sellers step back in. And, like I said, the Moody's news gives us a reason to maybe go down and fill this gap. One of the many reasons why I'm kind of putting my pivot just just below most of last week's range. I still think I would need to see some real violence before I'm really looking to kind of retest this, but it's basically sitting right around the Liberation Day high, which, if you're asking me, I would say to kind of fall back in these last, maybe going back about a month, the last months of balance, that's probably the area that I'd be watching, which is going to be that kind of 57.50s as high as the 57.70s. That is that the top of that after hours liberation high day. So I would love to see sellers potentially push us back down into that before I'm really looking to actively, sell this to zero, if you will, and thinking we're actually going to come back and retest some of these balance areas and these weekly profiles going back the last few weeks. I don't expect a absolute, I don't expect a gap down and flush the way it kind of was, like basically the reverse of the previous week's price action. But I don't think this really shocked a lot of us. I think we were even talking about this move and just kind of continuing to drift up on that news and making the joke last Sunday that, I really wasn't looking to be the first person to buy this when we were already up 1.5%. Of course, then I think on Monday we actually closed like up 3% and then just continued to march higher. But we had talked about kind of that 58.30s being an area of resistance, and it did. Once we kind of flipped over it, it acted as support again. 58.37, I think, was that low, maybe even actually wick down this old high pre-Liberation Day. So that is going to act, that area is basically last week's value area low. So for me to really look for sells early in the week, you'd want to see us kind of clear this support going back to last week, as well as obviously that area that sellers were present going back to kind of the middle of March. So how did everyone trade this? I'm curious to see, how everyone kind of, these are some of my least favorite weeks to trade. I'm just terrible at this type of price action, these slow drift ups. Like maybe there was a decent short. I think I caught maybe one or two of them throughout the week. But once we start just kind of drifting higher and consolidating, and then there's another leg higher, those like slow drifty type of trend days to the upside, if you can even call them trend days, they don't necessarily always have like a set of single prints or even a second set, but we just kind of drift higher. I just don't tend to perform well when there's not a lot of, I would say, not even reversion trading, but opportunities to get back in at some of these, low volume areas in the weekly profile. It always just tends to be a more difficult time for me. And of course, if you were shorting, I think at any point during last week's sessions, if you weren't strategic with your exits, you probably eventually got run over as we just continued to march and march and march higher. So I would imagine even if we do shake off the Moody's news, 6,000s probably is going to act as a bit of resistance on the longer time frame from sellers. I guess I need to add more days for my data here to actually populate, so we can take, now that we're talking about levels going back to potentially last all-time highs at the early part of the year, I probably need to add more days to my data here so we can talk about some of these other overlapping value areas going back to these weeks early in the part of 2025. So for the most part, I really am going to be patient, especially tonight and in the early parts of tomorrow. As I said, and as we're getting previews of this drifty type of action, I mean, I would love to see us potentially gap down and go retest at least that kind of 58.50s down to 58.30s once again to kind of confirm that the market's just going to buy this dip and shake off the Moody's news. But in the event that we rotate lower, my pivot's going to act as, basically even, what month are we in? This would be not February. This would be April's high, as well as the Liberation Day high, kind of keeping me hopefully on the right side of not looking to necessarily just get short immediately. I would love to see what the reaction is basically at that high, especially because I think even Besant was talking today, or maybe it was yesterday, a little bit about potentially some of the tariff policy being off for certain countries. So it seems like we're going to get that rhetoric potentially coming in the early parts of the summer trade too. So hopefully it provides us with a decent amount of opportunities in the coming weeks, especially as I think a lot of institutions and larger traders, like everyone just likes to head off to the Hamptons and Montauk and leave us to trade this sloppy, grindy price action in June and July. So hopefully that's not the case. Hopefully there is a bit of volatility still to come in the coming weeks, and I don't have to get a second part-time job as a lifeguard at a youth pool or something to fill the rest of my trading sessions. So I don't have to sit here and stare at these charts every single day. Usually it's a sign of a top. You can ask some of my trading buddies. When I start talking and making the joke about becoming a lifeguard in summer, we're usually nearing at least a shorter time frame top that at least allows us to potentially find some better opportunities for bi-directional trades. But it remains to be seen. So looking at this once again, I really not going to get too bearish unless we can get back inside the Liberation Day candle. So for me, basically that's starting to look at us pushing below 5800s, but we're past May OPEX. I think we have expiration on Wednesday that hope maybe could unclench us a little bit from just this drift upwards. Maybe we'll get a little two-sided volatility. I don't know, but I'm going to be patient the early start of this week just with the Moody's news on deck. I just want to see the reaction. So yeah, I would take a lifeguard job in Montauk as well, but unfortunately I don't have that luxury here in North Texas. It's not quite the same clientele, and that might be a little different of an opportunity here. Before we get to the Globex Open here in about 3 minutes, let's take a peek at NQ. Very similar drifty price action still exists. That gap still is going to exist down around the, I guess it's even lower. Or it's basically heading back towards the 20,000s. I believe that gap is maybe like 150. I don't exactly remember where settlement was from 2 Fridays ago, but very similar price action to ES. We just continue to drift higher and make the never-ending march back up towards all-time highs. We'll see. I would expect the 21,800s to act as a bit of resistance heading back to some of these profiles and kind of the bottom edge of that old balance range. If you remember, we were kind of consolidating and chopping for several weeks and kind of meander. I made this comment. It just kind of felt like when we were up here end of February, or excuse me, beginning of February, end of January. And like I said, I'll get more days because I feel like I only had maybe 90 days in my data here. I was trying not to break my charts when I was first building them for this show, but I think we need to look back. So I will add those. But basically, we were just kind of chopping, meandering in a pretty decently wide range up here. But I would expect those 21,800s, the 850s, to act as a tough spot. You really are going to need the support, I would say, from the Mag 7 and a bunch of tech to go make that march above and go break a new all-time high and probably go hit 23,000. But I would very much be watching for those 800s to continue to just act as resistance. In the event that Moody's pushes us back down, I would love to see some of this structure cleaned up. XY and I were talking about this on Wednesday when we were trading the close. It gets a little slippery. If we potentially were to gap down and start to lose kind of these 21,250s, well, the next support is easily another 200 plus points down. And then the same thing with the weakness in this structure of just kind of consolidating and then a big candle, whether it's news or data in the pre-market, just something that drifted us back up. The same thing is true at kind of those 900s and 800s. You lose that, we're talking gap fill back down towards the 20,300s. And then it gets a little slippery and we're at the Liberation Day highs once again. So same thing as we're trading this in the early parts of this week. I don't know how big of a gap we may get here in the coming seconds, minutes. I don't have the exact. Sometime in the next probably 30 seconds. I was not paying attention and I don't have a second clock. About 5 seconds. So we'll pause. And I actually want to watch this on the execution chart since it's actually up. Let's see if it actually works today. It does. So a nice little gap down on ES, a pretty big one on NQ, drifted down to about 21,280s and change. ES gap down to 59.20s, almost to the tick. So nothing like potentially creating a gap to then go fill the gap. I do make that joke sometimes where I hate when the market does that, creates another gap and then we go fill a different gap. But yeah, no surprise, I think, to anybody there that we absolutely were probably expecting it. I think even right on par, was not expecting something like insane, like kind of like we saw, I would say, even last Sunday when we gapped up basically 1.5%. I guess it's technically a little less than 1% gap down on NQ and about 0.6% on ES, roughly. I'm eyeballing. I can't exactly see and do the math. But yeah, I don't think that shocked anybody. I think that's kind of what we were all expecting and all talking about. The Moody's downgrade at least providing some downside volatility to start us off here in the Sunday open. So as I was saying, I'm looking really just going to be having these levels marked on my NQ chart. It's just areas to watch. You guys can all see this. Let me zoom in a little bit so we can get a better picture of this profile a bit. But looking at last week, like this is just a bit slippery, like I was saying. So for me, you want to be watching these kind of 250s to 240s or 230s, let's call it, as an area to hopefully continue to act as support. If you lose it, your next support is inside the 21,000. So a decent 250 point flush there is very possible if you were to kind of lose those 250s. So I'm going to just be cautious with trying to, get long here unless I see a lot of things on order flow with buyers continuing to kind of step in and defend this level. It just seems like that structure cleanup that is very possible, where we could just kind of retrace some of last week's range. I'm not saying we're going to go all the way down and fill the gap this week, but it would not shock me to potentially see, with the Moody's news, this weakness, like at least us kind of coming and filling in some of this volume between, basically inside the 21,000s. I'm not saying we're going to go fill the gap, but I would love to see some of that structure cleaned up. But just know, you do have that bit of weakness. If you lose this, even this is not, I would say, the best structure here in like the 750s to 950s. You could easily just see us kind of, just start waterfalling down a little bit if we did get some weakness in the earlier part of this week. And that's purely just based on kind of the structure of the previous week and knowing that that gap is still lingering there. So I'm just going to keep that in my back pocket, those spots to potentially be watching for, potentially kind of nobody to be, holding the bag down here, and we might just flush right through it. So, but as I said, to the upside, in the event we shake off this news, 21,850s, and given the range where the VIX is, that probably even makes sense to potentially go tag if you do get some continuation out of this range, or this low here at 200s holds and we kind of continue to consolidate and eventually get that breakout. We're probably heading back up towards those 800s. So that's how I'm kind of looking at this. As I said, if we start to lose those areas, be watching for that gap fill. Liberation Day high still kind of, in my back pocket down towards the 20,000s, just to keep us all honest here. If we were to really get some downside weakness and retrace last week's range, that's the top of this old balance area is where I'd be targeting. So we'll see. We'll see how things shake out. I'm curious. It's funny. I more so want to see the reaction into tomorrow after the Moody's news and just kind of see with everything else going on this week. And we'll talk about some of those events. It's a lighter news week, a lot of Fed talking this week. But some decent earnings releases too that we'll talk about here in a few minutes. But so far, the market's shaking off the gap down and making a march to try to already go fill the Sunday gap, which makes me happy because I hate gaps especially from Sunday or in the overnight sessions. They just drive me nuts. I know there's stats that some stats that will lead to them being filled. I think Jim had a good one that usually when we gap, if it doesn't get filled, or I think it was like 55% of the time, it gets filled in the Monday's RTH session. So We'll see. It looks like this might be filled before we even really get going here tonight. For 5 minutes in, and ES already has almost filled that gap. But in the meantime, let's talk a little bit about crude oil. If you guys remember last Sunday, we had talked, or I guess we were talking about like 2 weeks of structure, but we were talking about this wider balance range that we are kind of sitting in. And so far, that's still holding true, looking at even last week's range and kind of where we reoffered and made a slight move back down. So that kind of seems to be the range trader's dream for the time being. If we start to break out above this, I'd be targeting 66 for sure, which is kind of that 65 to 66. It's a range that goes back even to like August of last year, is an old bottom of a balance range that I think kind of the 55s, 57s, all the way up to 70s was the old, basically this box that OFL's auto plot tools has been nice enough to draw for me because it's an RTH gap. But that is basically the same general area of the old one. So what I'd be looking for, as you guys remember us talking about last Sunday, the bottom of this balance range is roughly around the lower 55s. I would even be a betting man trying to get long, probably even in the 55 40s if you got down there and we saw it's still acting as support. But for the time being, that range is basically 55 to, let's call it 62 50s before I'd be kind of looking to start getting out of this trade. So even looking at this, probably you would be using kind of the 60s to 59.50s as a potential like rebid long, which would be kind of just below last week's low if you were to take that out to kind of ride towards the top edge of this range. And I'm basing that also off the last few weeks of value area highs, kind of continuing to act as support, basically in that 59s to 60s area. So we talk about this, I think, on Trading the Close a number of times, or at least it's getting brought up. No matter the time frame we're kind of operating in, whether it's even shorter time frame on the 5 minute, on the 1500 volume, like how I trade ES. Sometimes in those consolidation zones, we talk about it on the shorter time frame where you can get that bigger kind of move out of that range. The same thing is true in these wider balances. It's just something I'm always a little cautious of. Like I may still play the edges, but if we continue to kind of consolidate and drift in the higher part of this, I'm making that bet that we may finally get that larger or wider move and break out to the upside. But given all the weakness that goes back to when the new administration took over in crude oil, I still don't necessarily want to fight that narrative. So I'm cautious thinking about trying to long this right now for a breakout. I'd almost rather see us kind of break out and potentially come retest the top edge of it to get long in that general area. Like if we were above, let's call it 60, I'd say 64s. I wouldn't be looking to long it there. I'd like to see us kind of come back in, retest maybe the 62s to 63s to try to get long for that wider move, maybe to traverse and break out to the old balance range at the lower end of 65s. But that's how I'd be looking at this. I mean, there's nothing wrong with taking the last week's value area high up here towards 62, 63 and try the reoffer if you're gonna take the short up here. And on the longer time frame, the trend is probably still on your side. If I were to draw a cran line on like a daily or a 4 hour, it might still make sense. But for the time being, you're playing this as a wider range trade going back the last few weeks until we have Crude loves to trade in these sometimes for months at a time. If you guys remember last kind of the end of last summer into the fall, that's what we were doing. And then we made that crazy high to like 80, 81s, whatever it was. And then the drill baby drill narrative starts, and we've been selling off ever since. But there's still plenty of opportunities in a range like this to find good trades. But it's always those where it's like trying to identify those longer time frame spots that make sense to potentially get long or reoffer up here. So yeah, maybe look for those reoffers at last week's value area high. See if those sellers coming in the later part of last week are still present, and it's the same people that were potentially reoffering the first time we try to break out of this range, going back to the end of April. So I'd be watching and cautious up there, but I would say looking at kind of the lows of last week, there's nothing wrong with trying that long around 60s. If we have the momentum, if you have the buyers on your side, trying to take that for that actual push out of this range. To the downside, though, we lose, I would say, kind of the lower, even the lower side of this box here. Probably 59s at the absolute. Like, I'm not trying to long this below that. I would expect us to potentially come back and potentially try to retest the lows of this again. But for the time being, I think this is constructive. There's a decent range here. Nothing wrong with trying to play the edges. All right. Everyone's favorite precious metal here. Good old gold. So last week, or last Sunday, we had that gap down, and it seems like we were kind of talking about this as we were coming on the air last Sunday, but was gold basically building a new balance range? It's like just like we were just talking about on crude oil. Was gold starting to build one between 3400s and basically, I think I said like the higher, like 3280s, I think was kind of the bottom of that range. So last week there definitely was a little more weakness in GC, and we started to do what one of the things I was looking for or hoping for before maybe we continued to go violently make new highs, but come back and retest some of these areas is like the only thing you're looking for if you were late to get long, even the longer time frame, or trying to swing long for it. One of those things you want is us to pull back and retest some of these breakout areas, fill some of these RTH gaps, which are these little boxes that are on my screen. So for the most part, we're kind of, even where we opened here around 3220s, retesting the bottom edge of that balance range going back these last few weeks. So I think as bullish as equities have been, if we're going to continue to kind of shake off the tariff narrative and the recession narrative, I think that was kind of driving some of the flight to safety that is everybody just buys gold in times of uncertainty. Like if that narrative continues to kind of be shaken off now and all things are fine, everyone's kind of rotating potentially out of something like this and back into equities and other things, then yeah, we may continue to see more weakness and drift back towards 3000s, which may act as a new floor. If I was a betting man, I would imagine there's a lot of buyers that would still come in around 3000 on gold, unless the narrative and the uncertainty that's currently in the airwaves like actively changed. But I would expect that kind of to act as a near-term bottom, even last month's low at the 2970s, let's call it. But looking at this week, I would expect more chop and consolidation, to be honest. 3200s has still kind of acted as a lot of support. Obviously, we drifted almost down towards 31, but now we've come back and kind of established that same bottoming area here. Looking at even last week's range, you have that high volume node here at 3185s that may continue to act as support. But I would much rather be looking to reoffer, yeah, around the 3270s. If you got that push back up, we were having trouble with the 3250s. That seemed to be the kind of spot that you were finding sellers continuing to reoffer in last week's range. But I would expect us to kind of retest that 3250 spot. And I may be dabbling in a little bit of some GC this week. But yeah, I'm looking. We talked about this when we were kind of up here on the inaugural episode of the show, and we had the push to 3500s. I'm kind of looking for maybe more weakness and some push down to retest this breakout more or less. But anything inside of the 3000s is kind of what I would like to see, and then maybe we continue to chop, consolidate, and maybe make that move back up a little higher. But yeah, that's gold. It's hard to have a massive edge in this right now. I would love to see us kind of come back, maybe get a chance to, like I said, reoffer here at the 3270s, 3300s. Maybe even go fill the gap from last Sunday. Could be a target this week if we get some momentum. So yeah, we'll take that. Let's see what's going on in equities. Looks like there was a bit of some weakness came back in. Oh, look, the opening range mid once again. I I sometimes like I love this little indicator. I know we talk about it like at this point probably ad nauseum, but I mean, if you're not using this, of course, now that we keep talking about it, it clearly we're gonna have to move to like a 10-minute opening range or the 3-minute or something else. But it's kind of funny the way it can act as support and resistance, and you get those opportunities to be long with it as support and reoffering in those areas. And if you don't have it on your chart, I mean, you could even there's a ton of indicators that'll kind of auto plot it based on your settings. You may have to add a mid or something, but the more I pay attention after Leo, someone smarter than me, has given me stats on it, it's kind of crazy how effective it can be at times, as well as the week open. I know we talk a lot about that too, but another area that's going to act as just something to watch throughout this week. That will be roughly, or is exactly 5930s on ES. So let's talk a little bit. Let's do a quick snapshot of some earnings for this week. I think we're well past the Mag 7 volatility that can come after hours, but there's still a number of good names. If you guys are paying attention, I mean, Walmart had their earnings last week and was talking a lot about tariffs. So I'm very curious to see somebody like Home Depot, somebody like Target, give their perspective on how it's going to potentially affect pricing for the average consumer in their stores. I think there's been a lot of narrative around it so far this weekend, even Trump demanding that Walmart not pass the cost on to their consumers. So I'm curious to see some of the other larger retail CEOs, how they potentially handle that narrative on their earnings calls, and what the story kind of shakes out throughout the rest of the sessions with some of these larger retail names, even TJ Maxx and some of the other ones that are actually reporting this week. But the other big name to pay attention to, Palo Alto Networks. You have Baidu, Zoom, Snowflake. Workday is always a good one to be paying attention to in the SaaS space. Good pulse check on the larger enterprise organizations out there in the space and what are they doing as far as their spend on business applications and other things. And love to always hear every big tech company's new way of kind of finagling an AI narrative into a product that's been around for a number of years. So always good to hear that too. And then I did forget about Toll Brothers as well. Another good one to get a good pulse check on one of the larger residential builders in the US. So always good to hear with everything still going on with housing. And I'm seeing more inventory here in the DFW just continue to kind of sit and pop up. Always like hearing those ones as well. So that's kind of the gist. A number of other names here, but those are the ones that are catching my attention. As I said, Home Depot, Palo, Snowflake, Workday, and obviously Target. So those would be the ones I'm least paying attention to in the coming week. And then on the economic calendar front, we do have, I made this joke when I posted this, the link to the stream on X, but we have a gaggle of Fed speak tomorrow and Tuesday. That is just a further never-ending book tour. It's funny when we're not in like a Fed cycle the way we have been, I would say, and since end of 2021 and 2022 when they started raising rates. But I guess in a normal trading environment, like, is this hard hitting news when they're talking and we're not in like a cutting or raising cycle? I guess I don't know. I guess with all of them having time slots and all of these things, it always just makes me laugh, the amount. And whenever their blackout period ends, it's just every day. It's just something else to watch out for. And then one person says something and shakes one of the algos loose, and we get a little bit of volatility for 10 minutes. So head on a swivel all morning if you're trading the pre-market tomorrow, as well as around lunchtimes. We have Bostic, Jefferson, Williams, Logan, and Kashkari. And then Tuesday, we got the whole day. So in the morning, we got lunch, and then shortly after the close, we'll have Kugler as well. But as far as data releases, this week's very light. It really is just Thursday going to act as the initial releases. So on Thursday, you got Chicago Fed, National Activity Index, and initial jobless claims shortly before the bell. And then we'll have flash PMI 15 minutes after the bell, and then existing home sales to kind of round us out shortly after the first 30 minutes of the trading day on Thursday. And then Williams to kind of close us out at 1 o'clock on Thursday. As I said, Friday, super light. Ignore Jerome talking next Sunday to talk about that before we get on our Memorial Day holiday that Monday. But Friday, really just new home sales, and then Cook kind of rounding us out in the middle of the session. So nothing too crazy. Like I said, if you trade pre-market normally and you rely on some of those data releases to make some good trades, this is not your favorite week. It's going to be rather light outside of Thursday in the pre-market and even shortly after the bell, which I don't object to be honest. I hate some of those days when we have 7:30, 8:30, 8:45, 9 o'clock, and then even sometimes, I guess, yeah, that really is the big ones. But those days that we have like all of those things and you're just kind of waiting for not only the data, but like for initial balance to set before we really do anything crazy. So I'm kind of thankful that this is a lighter week as far as data. And then we kind of go into a holiday, or at least a 4-day trading week the following week. So looking forward to that. And then we might kick off summer trading. Let's hope not. But yeah, that's it. A lot of Fed speak, very little amount of data. So far, gap down, pretty lackluster. A pretty lackluster move since then. I would expect this gap early in tonight's session to get filled, to be honest. We kind of bounced off the low from Friday, and that's held so far. So you guys can see it on my chart. I was looking at another chart of the same exact thing. But yeah, kind of just wicked down to previous day low on ES and NQ. NQ had a more violent down move, but for the most part, we're holding strong. So, and I did see this posted by our lovely friends behind the scenes, but if you didn't know, or if you missed the last opportunity when Ninja did a arena challenge, we are bringing that back. The registration link is pasted into the chat. I think it's actually pinned to the top of the chat. And it's going to be a 1-day challenge that kicks off on Tuesday. So if you are interested, there's going to be some cash prizes. We're going to talk about it, I think, on the show in the afternoon as well on Tuesday throughout the trading session. I think we're going to actually post some of the ongoing leaderboard stats for it. But I would highly recommend, if you were curious on the last arena or you didn't get an opportunity to register, this is your chance. So you heard it here first. We're going to talk more about it probably this week on the open as well as in the afternoons with the OFL crew. But cool opportunity to win some cash, win some merchandise, and have a little fun trading a sim account and seeing how much you can grow it in a single day. So the registration link, as I said, is pinned to the top of the chat if you are interested in playing around with that on Tuesday. I'm sure some of the crew will be having some fun and testing themselves too. I haven't made a decision if I want to try. That usually ends very, very poorly for me when I try to just like, how much can I run up in a single account in a single day? That's just not my style of trading. But for fun in a sim account, why not? I would say give it a go if you're feeling a little dangerous and you want to have a little fun on Tuesday. As I said, 1-day challenge, and prizes will be given out to the top 10 traders. And you can see all of the information and the rules and everything else posted on that link. So give it a try, give it a shot. I'd recommend everybody, if you are actively trading futures markets, to give it a go. Why not? So we've reached the time on the show where I'm going to open it up for questions. Anything anyone's curious about in the chat, whether it's about me, whether it's, going back through one of these markets, or anything else we kind of want to talk about here this evening. Oh, Jim is going to register for the Arena Challenge. So if you ever wanted to trade against the host himself, this is your opportunity by joining the Arena Challenge. Jim's going to trade. I mean, there's 226 people here. I would hope that majority of you folks register. I mean, why not? I'm actually going to look at this. Yeah, guys, I mean, I think why not do this? This sounds like a lot of fun. How far back in the past are you looking at previous support and resistance? So I know this doesn't show it here because I don't have my data all pulled past 90 days. But I typically, I mean, I'll look back as far as it makes sense. So as I was saying, the six, let's call it basically where the last week's high was, the 5970s up to 6000s is basically the bottom edge of that old wide consolidation when we were just kind of chopping and meandering around the all-time high. And it's like a bot, like that 6000 area was acting as support for us to continue to kind of march higher, going back as far as even like October. So it really can depend, but I mean, it's the same kind of resistance that we had even when we were selling off post February OPEX. Like, so it kind of can depend. I like to use those longer time frame value areas, consolidation areas, balance ranges, whatever you want to call them, depending on your time frame or the way you structure it. So, I mean, I might have on one of my other like 4-hour charts, like I'll have a visible range volume profile on my right too, so that I can like encompass, like look at all of those candles as well, going back to the all-time high and just kind of give me a clear picture. And one of the things, actually, I just realized my volume profile is not loaded, but I was trying to do this too. We're basically sitting at like the bottom edge of a high volume node and at the top of an LVN, if you were to kind of structure your volume profile and put some of that going back to the all-time high. Like if you had the rest of those couple weeks in the end of January or early, basically from like year to date, like that's kind of where we're sitting. So it just makes a lot of sense that this may be just a tougher area to kind of push through without some positive news. As I was saying, the Moody's news may give you that reason for sellers to come back in and take some buyers to take some profit and sellers to come back in and maybe reoffer us a touch lower. So I go back a few weeks. It could be a few months. It just depends on, when was the last time we were trading in this area? And it goes back to when we were trading at all-time highs. And that was basically October through January and even into February, excuse me. So I typically will just, look back when it makes sense when we were trading in these areas, and I try to build a longer time frame volume profile as well so that I could see, over the last, I mean, it's almost June when you really think about it, from year to date, like, was there a lot of activity in this area? And basically this just under 6,000 to kind of 5950s, like it's a basically a big low volume node to 5950s, 60s. So I'm just keeping that in the back of my mind for just like this, like another reason why obviously the Moody's news came out, but is that spot kind of completely random that we kind of this little end of the week rally just kind of stalled and ran out of steam? No, it was an LVN on a longer time frame that made sense to me. So that's kind of how I use it. Is there any point in using fib retracements when you have huge aggressive gaps? I mean, I'm sure there is. The market loves to retrace a number, like different ways. I don't have great statistics on it, but it's something I still will draw sometimes. Like it's always in hindsight with me because I don't use fibs to like guide my trades, but it's sometimes I may drag, like if you were to like all-time high to this low and have different fibs, like I'm sure it's tagged a lot of those areas. But it really depends. I think that's one of the reasons I don't use it, is because you can draw a fib 100 different ways, and you can find one that'll eventually come out and make sense for what just happened or where we may go. But I mean, I don't necessarily use them, but I do think that a lot of the time we retrace 50%, we retrace like the 37% one, 25%, whatever it is. So I do think there is some value to having an idea on, on a wider move, like where some of those retracement spots are roughly sitting, because the market likes to do that. But I don't necessarily use them myself day in and day out to actively trade. But yeah. Let's see. Just trying to go back. I know there was a couple other questions. Thanks, Andres. Thanks for tuning in. All right. So if there are no other questions, we will do a quick recap of ES. And let everybody get it back to their wonderful weekend here. So, as I was saying, I would love, first of all, before we really get going here in tonight's session, as well as even in the early parts of tomorrow, I would love for this tiny little gap to be filled. That's the first piece. Obviously, that's going to push us back up towards, or what was, do I have settlement on here? Okay, so the gap is up towards 59.50s. Okay, we'll just leave it there. So I would love for us to actually go close that gap before we do anything too crazy. We'll see though. So far, Friday's lows are holding, and we have a gap to the upside and a gap to the downside. So looking at this, as I said, I'm placing my pivot basically at the top edge of the Liberation Day highs. I would not be shocked just seeing the structure from an NQ standpoint gives me some hope that if this Moody's downgrade is actually taken seriously by the market and not just shaked off like every other thing that seems to be bad news, then I could see us potentially coming down and kind of retesting the top edge of that old range that we were trading in for several weeks. But for the most part, I would love to see us kind of come back down, retest down towards 5800s, and then maybe bounce off of it. 5830s is an area I'm watching, which is last week's, basically a little bit lower than last week's value area low. It's kind of the bottom here that we just kind of launched off of. Like I said, I see 6000s acting as a bit of resistance for the time being, just knowing it's a longer time frame LVN. I could see sellers just continuing to kind of re-offer in that spot for the most part. But if we were to actually come back down and break 5800s, I'd be watching that liberation candle high. And if we were to lose that spot, I would expect us to go fill this gap inside 5700s and kind of retrace majority, if not all, of last week's range. But we'll see. The Moody's news is interesting. I just want to see how the market kind of digests it in the early part of this week. As I said, and as you may have observed last week, we kind of just are, it just feels like we're in it's like a middle of July type of trading week at times, when we are just kind of stuck in consolidation in something like ES for 2 hours, and then we finally break out or we break down. It's just, you kind of have to catch one of those not longer time frame moves, one of those larger moves. Otherwise, you might get stuck in a trade all day. So it's a good reminder that summer trading is on deck shortly, and it's one of those where I'm not going to get stuck in front of my desk all day every day. I'm going to try to see if you can scrape a few points early in the session and then go do something better with your life. Maybe go become a part-time lifeguard and do something a little different versus just banging my head against the wall, like you can see with some of these consolidations of about 10 points in something like ES. Just not necessarily the best trading environment. Summer is never my favorite time to trade. So hopefully we get a little bit more volatility before that just kind of dries up and we just kind of do this type of price action where you consolidate and then we might just drift a little higher for weeks and weeks and weeks. But last week's value area high, 59, let's call it 59.56. Yeah, 59.56 is an area I'd be not necessarily looking to short, but I just am going to see if real volume continues to come in there and potentially still reoffers us. So this little box that's kind of auto plot drawn to here, something to just make note of. Basically is last week's value area high to value area low. Little tighter than that, but I think that might act as a bit of balance before we really get some decision making unless we actually do get a big sell post Moody's news. But it doesn't look like the market really cares that much. So far, it's just kind of shaking it off, and we are in the dead center of, on ES at least, in Friday's opening range. So that's the gist, guys. If there are no other questions, we can wrap it up and let everybody get out of here. I will say, this week, what am I thinking? Yeah, the whole crew will be back this week. My brain like turned off there for a second. The whole NinjaTrader crew will be back this week. Look forward to hanging out with Jim, hanging out with the OFL crew and everybody else on the team in the mornings as well as in the afternoons. Thank you all for tuning in, hanging out with me on a Sunday night. I know it is not necessarily the best time for everybody to trade, but I always do appreciate everybody taking time out of their Sunday afternoon, Sunday evening for some of us here in the Central or Eastern time zones to hang out and spend a little time to get an idea of where we may go this week, how we may trade, and just hopefully feel a little more prepped for the upcoming trading sessions. As I said, I always appreciate everybody hanging out with me. Trade safe out there. Be careful in the early parts of this week with the Moody's news not on deck, but already kind of providing us a little bit of downside. We'll see how the market reacts when we get some real volume here for the Asia Open as well as London. And then obviously the RTH Open with the rest of the team here on NinjaTrader Live. So we look forward to hanging with everybody tomorrow. I will be back to trade the close tomorrow afternoon. So everybody have a wonderful evening. Everybody trade safe. And we will see you all tomorrow morning, bright and early here. So take care, everybody. Have a good night.